Just looking at Telemast news hot off the press, I believe about half an hour ago, the news came out that they are to delist.
Yes, well, what's happening is Mario Pretorius owns about 85% of the company, and so you're sitting at a 15% free float, and it's not trading. So the economics of remaining listed for a cash-positive company is.
I mean, that's the height of illiquidity if you've
absolutely.
got a 15% free float.
Absolutely. So the question up is he hasn't named the price, and he hasn't decided whether it's going to be him purchasing the remainder or the company repurchasing the remainder. But it's all technicalities, and I wouldn't see at these levels, and given the current environment of the market, I wouldn't see any reasons why the guys wouldn't accept the price. It was put at a decent level.
Touching on Protech Khuthele, interim results out and profits almost halved for that company. Of course, we have had the CEO retire due to personal bereavement. But your thoughts on Protech with the results now on the table? Well,
Protech in the current year, they've been taking a view of chasing revenues, and they have a very flexible fleet. They've got very, very strong relationships with suppliers so that they can cycle their fleet. So they've been chasing revenue in the mining sector. The problem is the mining sector is very low in margins. So if you look at the results, revenues are up spectacularly. Profits have halved, and that's just simply a comment on margins.
Chasing revenue at the expense of margin.
Absolutely. Well, their theory was you get the underlying revenue, and then you can start to cherry pick the other contracts. The other contracts never arose. But that said, they still managed to, one, remain profitable, and two, the share price is trading below tangible NAV. So we're sitting in the position where, yes, the company is fairly geared, but all the gearing is asset-backed finance, so it's purely matching with their fleet.
Do you like it at 60 cents?
60 cents, I do like it. I do think it's a little bit more of a speculative punt, but it
will it recover with the construction cycle?
It should. And like I said, its finance is not loans, it's sitting with asset-backed finance, so it can trade in vehicles, and it can manage that finance on almost a day-to-day basis. So it should, we're looking at a position where trading below tangible NAV, profitable, shouldn't really be in that position. You could pick it up at a bargain now.
Well, from a company where profits halved at the interim period, we've got Wescoal, where headline earnings per share were up 137% at the interim period. Commodity-linked story here.
Not necessarily. What's happened in Wescoal's case is they've changed their business model. They used to be a pure commodity trader, well, coal trader. They're basically like Metmar, but purely in coal side. And they've moved over to basically a junior coal miner. They've got a split now. They still have their coal trading business, but they have a coal mining business. And the coal mining business, of course, once you're a primary extractor, you're capturing margin. And margin is everything. It filters all the way down to the bottom line. And we see a position now where last year the profits in Wescoal, the trading division basically broke even, whereas mining was only in operation for 1 month. We see a situation now where mining has been in operation for 6 months, and this is the kicker effect. Do
you believe, as Nicholas Zaror was pointing out just a moment ago, his pick is Exxaro? He feels very strongly that coal story holds weight going forward in terms of offering shareholders value. Do you believe that Wescoal will benefit from a positive, a buoyant coal environment?
Absolutely. Wescoal tends to, they're in a position where they may be getting export capacity. But as it currently sits, they're only supplying to the inland market. That said, the inland market follows parity with the export market. Because of course, if you're sitting and you can sell for X amount on the export market and you're getting a lower margin on the inland market, you're going to export it. So we're seeing a position where the inland prices are drifting up, and all that just feeds straight into Wescoal.
What happens now with WG Wern? News is that they've brought in experts to try and solve the financial problem the company is experiencing at the moment. Is there significant bankruptcy risk here?
Definitely increasing bankruptcy risk. You also saw John Warren resign the other day, so you've lost a strong figurehead at the top. Whether that's a positive or negative thing, he made some bad decisions.
This is also in the construction space.
Yes. Well, it's in the cement space, but they also went into aggregates, and they bought a quarry in the Western Cape at the peak of the cycle, just before everything fell apart. Brought in a lot of debt for that, and that financial leverage worked against the company because everything dropped off. Then they exited this quarry. Actually, it was just a couple of months ago, maybe a month, 2 months ago. They exited this quarry, basically reversing the entire acquisition. But it's ring-fenced them. They're not allowed to operate within the Western Cape now. Likewise, those guys are not allowed to operate outside of the Western Cape. Unfortunately, this is just at the position when the N1, N2 winelands route is coming on in the Western Cape, which is going to be huge spend.
With that bankruptcy risk now increasing, do you stay away from this one?
I would definitely approach this one with caution, if at all.
If at all. So it's a clear message there. Be very, very cautious. Serve unbundling this week. What do you make of the Serve story? The fact that we have got an diversified industrial group, services group coming to the market, to the main board?
Well, first of all, general comment, I like unbundlings. Because what happens is guys get them, they pop up in their portfolio and they view them as dividends. So the guys are just selling them down in the market, trying to cash them in. Because of that, you see a dip for the first couple of months, maybe the first year. The shares often trades far below value, simply because of this selling off effect. In Mvela's service case, they have some very valuable businesses that have far-reaching customers.
Do you like their new acquisition, SA Water, given the potential that water could be the next crisis that we experience in South Africa?
Absolutely, absolutely. I think, well, first of all, they also bought it at only a price earnings of 2. So that's a valuable acquisition from any angle, any business. The price earnings of 2, and it's a guaranteed profit warranty as well. So they're pretty secure they're going to maintain that. The only problem I have with water acquisition was where's the synergy with the rest of the group. You've got a cash in transit. You have cleaning and facilities. The water isn't quite a fit. They've also got another asset, King Power, which doesn't quite have a fit.
But they have said that King Power is up for grabs. Effectively, they would look to get out of King Power.
Absolutely. I'm just waiting for Famous Brands' bid. They're on the buying spree, so.
And then Keith, Clover, also coming to the market. This is going to be a completely new ball game for investors on the JSE all-share main board. We haven't had a dairy company for some time. I think we did have one.
That didn't work out so well.
Didn't work out very well. But Clover, would you be betting or backing this one?
I like it at 9 Rand. Do I like it at 12 Rand? That's another question. And of course, the book building exercise is a bit like betting with your eyes closed. I do think it's valuable. I think it's a fantastic business. I like the management. We had a good chat, and they have a good strategy because they're seeking profits going forward by rationalising costs. And that's a very low-risk strategy to growing profits.
We'll only have clarity on the listing price on the 9th of December.
Yes, it's one of those ones, depending on where it lists and how, it's maybe worth picking up post-fact.